Today, I want to talk about how Citadel is trying to become too big to fail. They're trying to enter multiple new markets like the bond market and crypto markets, trying to become a global systemically important institution, practically demanding a government bailout when they soon collapse. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, first, I want to talk about what Ken Griffin is doing and how he's trying to become too big to fail. And then I'll talk about how it impacts the AMC squeeze and how the squeeze will still happen, but how we'll just get paid out slightly differently. So Ken Griffin and Citadel Securities have confirmed plans to enter the corporate bond market. First, I want to explain why he wants to enter this corporate bond market and then go through these articles. Frank has said that Ken Griffin is trying to follow in the footsteps of his great hero, Bernie Madoff. Bernie Madoff was not just a hedge fund, but it was also a market maker, and it was also active in the corporate bond market as well. And if you watch the Madoff documentary, Madoff towards the end of his career also intended to become his own bank and print money for himself. Maybe that is Citadel's next step after entering the bond market, to try and infiltrate and enter the treasury and print money for Citadel Securities. You may say, Tom, that's impossible. Surely Ken Griffin couldn't infiltrate the treasury market, right? Or the treasury department. But don't forget, Ken Griffin himself said that he would run as treasury secretary. This would not only mean that Citadel Securities is a market maker, hedge fund and dark pool operator in the stock market or in the crypto markets and bond markets as well, but you'd have the CEO as treasury secretary himself as well, effectively becoming his own bank and money printing machine. Frank said he's trying to entangle his company into as many markets as possible, so he can claim that he runs an SFO. Now, I think Frank has the wrong term here, because SFO is Serious Fraud Office or Serious Fraud Investigation. I think the term he's looking for is either GSIB, which is Global Systemically Important Bank or Institution, or effectively just a too big to fail fund. He thinks his only way out is to become too big for fail. Frank said he's in for a rude awakening. He said Citadel is not a Goldman and that it never will be. Right now, Citadel obviously isn't a Goldman because they're not a bank, they're just a market maker and hedge fund. But obviously if Citadel can encroach into the crypto and bond markets and also become Treasury Secretary, I think he gets himself pretty damn close. But so let's talk about how Citadel Securities is trying to enter the corporate bond market and why. This article from Bloomberg talks about how Citadel Securities is muscling its way into bond credit trading. It says Ken Griffin's market-making powerhouse is challenging Wall Street banks on their own turf as it enters the multi-trillion-dollar world of corporate debt. Citadel Securities LLC started offering investment-grade trading to clients this month, with plans to make markets in high-yield bonds by the end of the year. Already responsible for more than a third of all US retail stocks traded in the era of online apps like Robinhood, the firm is ramping up its presence across fixed income beyond interest rate swaps and treasuries. What Citadel is trying to do is not just become a hedge fund, market maker and dark pool operator for the stock market, but to do the exact same thing in the crypto markets and bond markets as well. They're effectively trying to become too big to fail so they can effectively become a global systemically important institution and pretty much demand any kind of bailout they so choose. Their argument being that not only would the stock market be ruined if Citadel ended up collapsing, but so would crypto markets and so would bond markets as well. It'd be pretty much the end of capitalism as we know it. Jane Street, another one of those market makers, is also already doing the exact same thing, already trading these corporate bonds as well. It says these trading houses are encroaching on the turf of Wall Street dealers that still dominate trading with their originate to distribute model. Yet the opportunities to transact across the credit market are vast, and Citadel's ability to ride tech-fueled trends has made it one of the biggest power brokers on Wall Street. So we can see that Ken Griffin is ultimately trying to become too big to fail. Not necessarily so that he can escape the squeeze, but just so that he himself doesn't have to pay for it, and so that Citadel Securities doesn't end up going bankrupt. But so how exactly does that work? How can a squeeze still happen, but Ken Griffin and Citadel Securities not be responsible for paying for it? Also guys, be sure to sign up to Moomoo to get that guaranteed free share of Tesla or of Google and that $100 cash reward, which you could always use for more shares of AMC, GameStop or of Ape. All you have to do is sign up to Moomoo using the link in the description below. Moomoo is also very easy to use. They've got tons of technical indicators, and for those interested in playing options, they've also got tons of option availability too. Obviously, if the Fed and the Treasury determine Citadel as being too big to fail, when it eventually collapses, they will provide that bailout money. When the squeeze happens, Citadel will still have to pay out for the squeeze, they'll still have to buy back all of those AMC shares, but they won't be using money from their bank accounts, they'll effectively be using that bailout money from the Fed. The Fed will likely provide a $2 trillion, $3 trillion, $5 or $10 trillion bailout package for Citadel when they end up collapsing, which will be used to pay for the squeeze. That way, all these shares of AMC, all these synthetics have been bought back, the squeeze has been paid for, Citadel Securities survives after that government bailout, and we still get the money. I'm sure this will likely end just like 2008 with no senior executives, no Ken Griffin and no Doug Sifu actually going to jail. They'll just say it was a massive mistake that got carried out of control and that we needed rescuing. And just like 2008, the US taxpayer will have to stump up the cash through those Fed bailouts to rescue Citadel and to pay for the squeeze. But ultimately, Citadel entering this corporate bond market may not be the best deal for them, as Bank of America is currently facing $100 billion in paper losses in the bond markets. The Cabesi letter tweeted saying these losses are reportedly due to interest rate increases, the same reason that Silicon Valley Bank and First Republic collapsed. And they've said the effects of rapidly rising interest rates are just starting, especially as Citadel is just entering the bond market now with still more rate hikes to come. It's likely that Citadel will end up losing hundreds of billions of dollars on paper in these bond market losses. And it's likely that along the way, multiple other banks may end up collapsing if they're also facing the same kind of losses that Bank of America currently has. And speaking of Citadel entering the crypto markets, we're already starting to see some form of crypto manipulation. Bloomberg tweeted saying the opening of a new crypto exchange backed by Citadel Securities has unleashed a speculative mania in Bitcoin Cash, an offshoot of the original Bitcoin digital token. We can see the price of Bitcoin Cash over the last week has rocketed from $86 per coin all the way to $234. We can see that literally over the last week, Bitcoin Cash has risen from £83 or around $100 per coin all the way to £234 or $300. Bitcoin Cash has literally 3x'd in the last week after Citadel Securities entered this market. Therefore, it's likely Citadel is already trying to pump up new markets to generate additional liquidity and additional collateral. Now the FTX tokenized synthetics are gone, Citadel needs a new way to pump up liquidity, and it looks like they've just found it. They can now not just start pumping random stocks, but even pumping random cryptos to generate themselves that much needed cash. Now, America has also tweeted the final tally of objectors who submitted proof of ownership for the AMC lawsuit. And what's really interesting is yet another short has exposed their true short position and their hate for this AMC reverse split. And what this has done is just exposed another short that is petrified of the AMC reverse split and conversion. He said it's funny how the last name on the list is Andrew Han of Ursa Fund Management, the guy with 11.3 million AMC puts. So Ursa Fund Management do not want the AMC conversion and reverse split to go ahead because they obviously hold this giant put position and it'd likely ruin their short. Clearly these hedge funds, just like Ursa Fund Management, are indeed petrified of the reverse split, which will be going ahead over the next few days or next couple of weeks. As Spence tweeted, he said if the court decides to delay the ape conversion for 90 days due to the absolute insanity of the gaggle of people and funds who have no legal standing to damages. He said, I'm going to find the best possible lawyer and sue for damages of my devaluation to his ape shares during this nonsense. He said a total dismissal of the lawsuit and immediate conversion of AMC and ape, in my opinion, is logical. Clearly these hedge funds are petrified of the reverse split and conversion and are trying to do anything they can to object to the lawsuit and to delay the conversion further. Now, as Cristobal tweeted, he said, does anyone wonder who the leaders of the AMC objector shills are? Who is the puppet master or masters pulling the strings? Well, as Peter Han replied, he said, truly you must already know. The common factor is who? Ethan, Al, Daily Blend, Froggy Boy and all others that cluster around. They were all saying in a space call some time ago that the best way to screw over Adam Aaron was through the courts. And then a month after he said that, Allegheny objected to the reverse split just before the vote. Obviously in that group of shills like Al from Boston, you've obviously got other people like Mark Kohrs, Charles Gasparino, and that girl trader Amy. And speaking of Charles Gasparino, he said he's just had a great time last night with Doug Sifu and a few friends celebrating some of the things that make America great. And he said those things are coal oven pizzas, payment for order flow, short selling, and dark pools with a little Ken Griffin thrown in, only in America. And again, here's a photo of Charles Gasparino with Doug Sifu, obviously celebrating an evening out and being the best of friends. It's clear to see these guys and these shills and these short sellers are all working together, trying to object the AMC lawsuit and trying to delay the conversion further. And speaking of Doug Sifu, he just retweeted a video showing his dislike towards Gary Gensler. And he said, "This is why I'm so vocal against the politics of Gary Gensler." He said it's terrible for our markets and for our country. Obviously, it seems now that Doug Sifu is somewhat scared of Gary Gensler's new proposals for more disclosure and more legislation around short selling. Especially now Gary Gensler is starting to actually go after these short sellers. Clearly, Doug Sifu sees himself in a firing line. But guys, be sure to let me know what you think down in the comments below. And as always, guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.